80% of the stock market is controlled by machines. Here's why that's a good thing for you. 45% of trading volume is high frequency traders. Don't worry, you can't compete with them. They literally build their facilities as close as possible to exchanges to get the best data before you do and other firms do. But 25% are passive indexes, 20% are humans, and 10% is your neighbor trying to day trade based on their own algorithms. We can take advantage of this. Passive funds just copy whatever fund they're trying to copy. In this case, the S&P 500. If Nvidia makes up 7% of the S&P 500, then this passive fund, which is following the S&P 500, has to have 7% of its cash allocated to Nvidia. That means a lot of buying. And then your average goof on the market, see market go up, they go buy, creating more buying pressure. The S&P 500 is meant to track the 500 biggest stocks in the world. So when a new stock enters the top 500, that means passive funds have to start buying that stock to copy the S&P 500. You guessed it. Over the last 5 years, if you were to buy these stocks you can see on screen here, Palantir you might be familiar with, if you were to buy these stocks 30 days before they were included in the S&P 500, that's public information, then this is what you'd be looking at. Over a 70% win rate, with an average return of 6.8%. And let's just say there's some really good returns to be made here. Start using the data and start winning. marketspredictor.com. So you can start taking advantage of the machines and amplifying those returns with the fear and greed of humans.